Thanks, Sarah, and thank you once again for inviting me to this great weekly event, which goes on every year. I do have a little bit more hair than sometimes it looks. Sorry, it's the video seems to get rid of any of it that's left. So I'm Jamie Strauss. I'm the founder and CEO of Digby, which is an ESG assurance solution and provider for the mining industry, which has been going for 2 or 3 years. There's a very strong collaboration with Sotala in terms of developing and designing it alongside the financial industry, but also on the assessment and guidance to these companies. It's been going for 2 or 3 years, and it really comes back actually to one of the things that SOAD says is very much more than just carbon. It covers the entire spectrum and allows mining companies to put out their strategy over the future rather than just look in the backward-facing mirror. No doubt we'll probably touch on some of that. So my background is 30 or so years in the mining finance industry, and otherwise I'll stop there. But thank you.
Thank you, Jamie. So building on, I guess, some of what Suad was saying, and so Benchmark have got their sustainability index, etc. Digby has a very different approach with regards to pulling together the data and building the platform. But as you saw with Benchmark, they're putting together some pricing, which is where you've got that differentiation perhaps between different sources or types of nickel. Beyond that, to what extent are investors actually, truly incorporating sustainability into their decision making and as a risk metric?
Yeah, it's a really good question, and one needs to be fairly succinct here without going on long term, because there are so many different parts of this. You know, on one side of it, one could argue that sustainability investing generally in the world has been completely consumed in the course of the last few years. I mean, you know, look at the tech industry, the financial industry, and they've all gone up in price, and all the brown industries have gone down, and they've punished them. So to that extent, you know, it's very much there. But then when you look into the actual detail, well, first of all, has it worked? Because I think the question is, you know, supporting a green company and therefore punishing those companies that are not considered green, is that the best way to have positive impact? And one could go on in quite some detail about that. But if you actually go into the detail and talk about some of the investors within the mining industry and be focused on that, how involved have they been? I mean, to some extent, again, depending on the spectrum of the investor spectrum. If you look at private equity, you look at commercial banks. Well, the commercial banks have included Equator Principles and IFC back since 2003. And therefore, that in effect allows us to have the view that sustainability in principle has been around for a long time, and projects driven by the Western banks have had to adopt that for a long time, and therefore our perception is probably wrong of the mining industry. It's not as dirty. It has incorporated a lot of this. But then you actually go to other parts of the spectrum of where we are over the course of the last 5 or 6 years since ESG investing has perhaps been more prominent. And I think it's fair to say that traditional investors, it's been a bit of a mixed bag. You know, there's been a lot of talk. There's been a lot of stuff on websites. There's been a lot of commitment, a lot of statements. But actually, has it really been incorporated? Is it, you know, are we differentiating companies between good and bad in the mainstream? I think probably not. Now, what I'll finish on this question is that changing? And the answer has got to definitely be yes. So, and not got to be as in the future, it is definitely changing at the moment. I mean, you can see real impact and change happening. So private equity and commercial banks, that I think has largely been in place, and it's being built upon. It's becoming more of a forward-looking tool. It's becoming more of a requirement to get in early and do that and express that impact. But from a traditional fund manager at what I would call institutional funds, there is now that evolution of sustainability and how it's being included within the investment approval process, the credit committee approval, etc., is increasingly ramping up. I think there's more alignment I think there are more tools out there to allow these companies to be able to do this. And I think the fund management industry, particularly with regards to the investment, within regards to the mining industry, is recognizing that our execution hasn't been great in the past, and that actually good sustainability effectively leads to good execution or better execution, where management teams are seen to be on top. So hopefully that gives you, I mean, it's a broad question, so hopefully I've covered the spectrum of time and specific investment.
We've gone time, space, all of it, Jamie. Thank you. So just in terms of that, I guess that trust that the investors need in the mining sector, but then also the data or the knowledge and information that they need or they're using in order to work out, okay, well, hang on a second, which companies might they be interested in investing in? The traditional way of doing this, of course, is through some form of report, and so things like sustainability reports. Do you think that our current approach to sustainability reporting, or as they're typically used right now, is that sufficient for the mining industry to earn back trust so that those investors can come and join the party?
Yeah, it's a good question, because if you were to talk about it outside of the mining industry and you reflected just on the major companies which are listed, the answer arguably could be, look, it's fine. You know, what is a sustainability report for? It's to get non-financial information out of a company up into the algorithms of Sustainalytics, MSCI, S&P, and all the rest of it in order to create an ESG rating. I think there's a lot of issues with that, regards to that, which need to be addressed and have come through evolution of incredibly fast evolution of ESG reporting or ratings. And that is why some of the rating agencies have got involved, some of the regulators have got involved with beginning to regulate these rating agencies and ensuring that there is better transparency, better methodology, and better sector-specific data. So if you look at it just from that, you know, the top end of that market, look, the process is there, it can be enhanced, but it is all backward. It's largely a backward-looking basis to review. And I think, as Adam Matthews from the Church of England highlighted, and others have supported him in this, and very much relates back to ISSB, which had great concept at the beginning, but ultimately, probably because it's driven by accountants, but ultimately has ended up with a backward-looking generic approach. And that in itself doesn't help a management and a board make future-looking decisions at the boardroom table. It's a blunt instrument. So to answer your question is, look, let's look at the mining industry. Where are we? Global Scan come out with their annual review, which Ro Darwin at ICMM highlights every single year. We are the worst perceived sector on the planet. We're the lowest trusted sector on the planet. However important every single one of your presenters has given to the mining industry, we are considered terrible. And to me, that gives an opportunity. I mean, let's not look at the glass half empty. Let's look at the glass half full. This is a huge opportunity. This is an opportunity that this sector can embrace, can actually be quite proud of in quite a lot of the instances. But let's make sure we communicate it more effectively. And that means we've got to earn trust. And earned trust doesn't come on a silver plate. It doesn't come from doing backward-looking data. That's a very blunt instrument, as I was just saying. So sustainability reports are not required for most small junior mining companies who are developing mines of the future. They should be aspiring to doing it, because they should ultimately get to the stage where they are rated. But we need to have that double action. We need to prepare companies ahead of that. We need to mitigate risk in order to ensure that they are well prepared for that. And then they need to ensure that the information that they do then supply is not a marketing document, because a marketing document is not credible to a large extent. I mean, it's not. I mean, it's driven internally. There's no third-party assessment to that. So, and therefore, we need to make sure that we then get to that stage where we can provide credible information, which is standardized, which is future-looking, which can be held accountable, so that those rating agencies then have that information available to them to minimize errors, which is a big issue. That's another side, but also to make sure that those algorithms then present a fair and balanced case going forward on sustainability. It's such a big subject, this. But bear in mind that 2/3 of this industry doesn't have any revenues, is not rated, and therefore doesn't need to provide a marketing document, which is not read by anybody. But let's get out there and use sustainability as a value add for this sector, and earn our brownie points and get the trust back.
And so, I mean, I guess with that, Jamie, when we're saying sustainability reports, we're not meaning that kind of that glossy brochure. It's actually more the information about what that organization is doing now and building for in the future in whatever format it might be. Is that correct?
Yeah, that is correct. I mean, the sector's particularly bad at giving a harmonized version of what they do, despite the fact that however different every single project in the world is, we're all digging holes in the ground. And surely we can do a better job of that, to therefore encourage trust, with the different stakeholders that we've got to engage with.
So with that, in terms of that trust, and we heard from Hershey earlier on in the week and on Tuesday, where she was talking about, one of the kind of the three aspects of trust is actually delivering on what you say you're going to do. And quite often in the world of sustainability, people say, okay, well, actually good sustainability results in good operational execution. Is that true?
Yeah, look, I think increasingly, well, first of all, the background is that we've not had good execution, whether it's big companies, medium companies, small companies. I mean, I think we all accept that. I mean, that's why one of the reasons why, and I was talking with Temasek the other day, the sovereign wealth fund out of Singapore, which was a major part of the ecosystem back in the 2000s of finance with the mining industry. And they've said the sector is no longer eligible for their investment, and it's irrelevant because we're below 2.5% of the S&P. Now, we've got to earn trust in order to make ourselves more eligible, which will allow the relevancy to come back in. And I have no doubt that we can achieve to do that. So there's no doubt in my mind that good sustainability, given the fact that it touches on so many topics of day-to-day operations, whether it's governance all the way down through to operations on the ground, if we're on top of those issues and we've got targets with which we can aspire to of the future, then that makes that company and that management team better respected. I mean, look at the examples. I mean, the Lundin family of mining companies have a track record of meeting their expectations and not having major issues. And where there are issues, they address them quickly and they get back on top of that. Now, does that come by luck? Of course not. It's well structured and organized. Agnico Eagle would be another one, which I think it needs to be pulled out. They had challenges, I recall, back in around about 2015, 2017, I think it was, because they were developing too many operations at one time. They got back on top of that. They addressed it. They were aware of it. They got it, and they've regained their premium pricing. So this is not a coincidence, and we don't do enough about building brands within the sector, which comes through better execution, consistency, and I see sustainability as that great opportunity of delivering not only aspirational data, but also proving what we can do and be held accountable, which can effectively develop that. So yeah, I think this is such a massive opportunity but good execution, good sustainability definitely equals the opportunity to demonstrate good and consistently good execution, which is the end result, which must then end result is eligibility and relevance for the sector.
And building on that, so you've been saying the opportunity word in here. We heard a fantastic presentation earlier on today from Tabasile from Sibanye-Stillwater, who shared with us the case study of what the organization has done with regards to Marikana. So the horrific Marikana events of August 2012, of course, happened underneath a different organization. So it was a different company, and Sibanye-Stillwater have gone in there and as part of getting that operation back on its feet, put together the most amazing program, which is what we heard about earlier. And of course, Sibanye-Stillwater has also picked up a number of other assets around the world where there is a history of really terrible environmental degradation. And so therefore, you've got companies that are willing to actually look for the opportunities in these legacy mine sites. Bunker Hill is another example where you've got organizations going in and picking up sites where there is environmental or social threat that has been realized and saying, well, actually, part and parcel of extracting the raw materials out the ground, we can actually look for the opportunities that can be realized through the sustainability space. Do you think that that is being accurately shared and measured by investors, where they're looking for the full value of understanding and being stewards of the ground? Or are people just going back to, okay, how much is the platinum worth? What do you think?
Yeah, so I mean, opportunity, I think, is a really, I mean, almost one needs to have a conference on just the word opportunity for this sector, because look, if you look at the opportunity that this sector is providing at the moment, first of all, I think we must respect the negative potential. So the negative potential is, if we do not embrace this, if we do not go forward, we risk, and one could argue with that already, but we risk being completely irrelevant from the modern day financial community. Now, we're already 400 basis points above on the cost of capital, energy and agriculture. And as Mark Cutifani famously said, I think it's mining takes up 0.04% of the world's landmass, mining takes up 0.4% of the world's landmass against farming, which is over 50%. And look at the carbon and other issues of farming, which need to be addressed. So there is a complete imbalance. But if we do not take this opportunity and address some of these issues, we risk being outside of the mainstream finance community. We therefore leave ourselves into the hands of, I don't know what the right word is, but black finance or darker pools of finance, which therefore means that ESG or sustainability and responsibility on mine sites is a serious concern going forward. I mean, I think, if we don't have commercial banks lending money, and the Australians have largely left the sector, having been a very significant part of it, if we don't address that, then that risk is really quite serious. But and does critical minerals just address that? Kind of almost make that irrelevant. The answer is, I don't think it does. We will have a supply shortage and prices will go higher. Maybe that will incentivize things, but who will be financing that? So I think that's got to be recognized, because we are currently there at the moment. I mean, or at least on the border of it. But equally, I see the opportunity being there at the moment. Also, I think there's a neat balance going on at the moment, and I do believe the opportunity will win out. Sibanye it gets huge credit. I mean, they were very much part of my desire to have them testing our own solutions right at the beginning, because of the success that they'd done with Marikana, which you had highlighted. Not just Marikana, but also across their business, and the incredibly good principles and procedures and also action that they've taken place in order to address that. So the opportunity that presents itself comes across so many different aspects within the mining industry. The areas I would particularly point out is perception on the ground with local communities. If you can communicate to them credibly, transparently, give them reason to believe that this mine is a positive and a contribution to the community and the local environment, not just the social side of it, is a huge opportunity to turn around negative perception. Equally, on the financial side, it goes back to what we were saying at the first question, is brown sectors have been massively punished. The mining sector is ahead of the curve on sustainability, but basically through robust permitting and everything, and all the other things that they've been doing for the last 20 years. Sure, there have been some tragic incidents which need to be addressed, and we always must go down to zero harm, both environment and social. But ultimately, if you're looking at the opportunity side, we have got a sector that is trading at about a 40% or 50% discount to where it was in the mid-1990s, which was before China came in as a big demand provider. So we've got such a huge opportunity to transform that through a forward-looking process with credible data, third-party assured, that raises confidence, not just on the ground, but also in finance, debt and equity, in order to make sure that we bring money back into this sector and provides performance on a returns basis, but equally a lower risk when it comes down to execution, which therefore has a net win across many different aspects. And that's super exciting. I mean, from anybody in the financial industry, that's got to be one of the greatest, if we can achieve that. And the tools are there. The tools are completely there. And then beyond that, you've obviously also got you've got demand growth, which everybody else has been talking about through critical minerals as well, which supercharges it.
Yeah, absolutely. And just one final question, Jamie. You mentioned permitting. And so, you know, you said, right, we've got lots of, you know, there's lots of good permitting, for example, that's in place. What incentive, I guess, is there for companies to go that extra mile? So beyond what they need just to get the piece of paper to give them permission to go and do something.
Yeah.
So why should a company go and be transparent and then, but more importantly, actually hold themselves accountable to
Yeah.
what they're actually doing?
Yeah, I mean, best case of these things is to tell a story, and it was a story that I came across only 2 days ago, and it was a company that is a gold and silver producer, been around for a long time, done a lot. Well, it's Fortuna Silver actually, so West Africa and South America. And I was having a conversation with their head of sustainability and the CEO, and two things came out of that conversation. The first thing is if you have a good relationship with the local governance and the local permitting process, then there is no need to extend out that permitting process. So clearly, if the permitting authority is comfortable with what you're doing, providing positive interaction and positive whatever it happens to be with the local community, with the way you're managing your social things, how your tailings dams and everything are, or whatever it happens to be, and that regulator is comfortable with you, are they going to extend that permitting process out for a long time, or are they going to try and get that mine built because they've got social license already in place, and therefore they're going to develop more jobs, have a greater ecosystem on procurement and all the rest of it that goes with it? No, they're going to do what they can to get this thing going forward within the standard process of time. The second thing which came out of that is the company is now looking at going beyond zero harm. Now, what I really challenged myself, and I haven't got the full detail of it, but going beyond zero harm means how can we continue to add value into the community other than just having zero harm as a goal? Now, that needs to be better understood by me, as probably before I come onto a conference and talk about it. But I thought it was interesting to see the aspirational impact going forward as to this isn't just standing still. This is not stationary. And I think it was Soad's presentation earlier, is that ESG is evolving all the time, or sustainability is evolving all the time. And it's interesting that this zero harm thing that's been around for quite a long time is actually, there are companies out there now going beyond that. And that's a way to begin to earn brownie points and credibility and trust back into this sector.
Awesome. With that, Jamie, thank you so much for joining us here today. As always, absolutely fantastic. Thank you very much.
Thank you. Thank you, and to all of your team as well.